JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Espresso with me, Darius and Anucauskas. Today is the 25th of February 2020, so yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a quick look at the markets, a few of the charts, a few interesting setups. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then, just before we jump in, as always, I'll quickly mention of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which you can find here on the top. If you go on jfdbank.com and yep, click on the research page here, and it will take you to the place where we deliver our daily analysis, fundamental and technical. So yep, you can feel free to check us out here. The daily report right now is getting prepared, so feel free to visit us in about maybe an hour and a half. So yep, keep your eyes on this, guys. Right, now then, let's jump into the charts. Now, the first one I want to touch on here is the Ftse 100. Now, of course, as you understand, as you've seen it already, we sold off heavily yesterday due to the fears of the coronavirus. Now, in a way, I was talking about this one yesterday in my Traders Tea Time, and what I was saying, that given that the fact that we managed to break this this medium-term upside support line taken from the low of the 3rd of October, and we also dropped below the 7,275 territory, this kind of opened the path towards this other key area of support near the 7,131 level, which is the lowest point of December. Now, the index got a hold up here. You see, we saw a nice break here below this, but it kind of still stayed above this territory. So what I was saying, that if we do get a close above this level, above the 7,131, then there could be a possibility to see maybe a bit of correction here to the upside. So looking at the cash index right now, we can see that the Ftse 100 is trying to correct a little bit higher, trying to retrace and recapture some of its losses. Of course, don't get me wrong, the correction still could be short-lived because there is a lot of negativity right now in the equity markets. So that's why, guys, for now, keep your eyes on this potential correction. In a way, if you're trying to find a potential level here where it could stop, maybe consider this little territory, the low of the 13th of December, and that's around the 7,223 zone. So because the cash index right now is around the 7,194 level. So basically, we'll keep an eye on this one, of course, but for those who are more on the cautious side, you could just wait for a nice good drop below the 7,131 zone, and then yep, if we do see something like this, then this could open the path towards the lowest point of October near the 7,001 territory, or in other words, you could target that psychological 7,000 level. So for now, yep, like I said, we are looking for a bit of correction, for a bit of more correction, but still the downside scenario is for us the main one. In terms of the upside, if by any chance this climbs back above the 7,275 zone and pushes it back above this this medium-term upside support line, then yes, this is where we could consider a potential move towards this downside line here. So yep, something to consider, guys, something to keep an eye on. But again, for now, it seems that the the upside could be slightly off the table. Cap 40. Now I don't look at this one very often, but last time I looked at this one and we were still hanging around here, and what I was saying that if we get a drop below this 5,994 territory, there could be a possibility for a further decline. And look how well this played out. Of course, initially I wasn't expecting it to drop that heavily, but of course yesterday's trading activity helped to push this index towards the lowest point of January, near the 5,799 zone, because that was initially my target here. Yep, we saw a bit of a drop here below that, and so of course all this kind of creates this bearish atmosphere still, but still looking at the cash index, we can see that the price has rebounded slightly, and we are currently kind of balancing around here somewhere near the 5,830 territory. So keep your eyes on this one, guys. Still, like I said, even though we could go for a bit of correction here to the upside, the overall now trend well, not the overall, but the short-term trend here is still to the downside. Again, something like this could happen where we could see a push a little bit higher here. Maybe we could get a hold up somewhere around here, maybe near this high of yesterday, near the 5,885 territory, roughly around there. But again, as I said, guys, we are still more bearish than bullish. Our next target will be this low of December near the 5,697 zone, so something to keep an eye on. But yep, guys, for now we are seeing a bit of a correction, but let's see how far this correction can go, and if it starts sliding again below the 5,799 zone, then, well, I mean, keep your eyes on this lowest point of December near the 5,697. Gold. So gold, of course, the equities, right, the cash indices are correcting to the upside. Gold is heavily drifting lower. So what I was talking about yesterday when I was covering gold was that if it remains above this little territory here between the 1649 and 1652, then yep, we could see a nice rebound and a push back to the upside. But as you can see, the commodity is now drifting below this, so it's going for this larger correction. Now the big question here is, can this actually drift all the way here back towards the 1612 territory? Because that's basically, that was the previous highest point for this year, until we kind of broke it on the 20th of February. So in a way, if we do see a drift lower and we see a drop below the 1612, then yes, we will aim further for this short-term upside support line, slightly steeper one here, taken from the low of the 12th of December, and then we'll take it from there. For now, guys, probably it's a little bit of a tricky one at the moment. Yes, it drifted below this key area of support, but it might find some support maybe somewhere here, so that's why we're not really touching this one. We're not doing anything with it, so we're just keeping an eye on this 1612. If it falls below this, then yes, this is wonderful for the bears, and we could see this one drifting a little bit lower. But if it stays above here, above the 612, then, well, I mean, if it climbs back above the 1652 territory, then we'll start aiming for the upside again. Ripple. Now, Ripple, I talked about this one last week, and basically I was telling you guys to keep a close eye on the 0.2680 territory. So we finally managed to get a nice drop below this. It is now drifting lower, but what I was also saying that keep your eyes on this steeper upside support line taken from the low of the 2nd of January. So because this is the kind of the area where the bulls could still come in and could try to lift the crypto back to the upside here, but for the downside, that because it's all this area right now is very tricky, for the downside we would like to see a break of this upside line and a drop below the 0.2611 territory before considering lower areas. For now we're going to remain neutral, although we're still trading above these upside lines here, but still we'll remain neutral and wait for a clear indication of what it wants to do, because for us, for the upside, we would like to wait for a just adjust this very quickly here, guys. There we go. So for us, for the upside, we would like to see a push above this barrier here, the high of last week, which is around the 0.2852, 53 zone. So only then, after a break of this one, we will only then consider slightly higher levels. AUDJPY, now jumping into a few pairs. So I talked about this one yesterday as well, and I was telling you guys to keep a close eye on this little territory, the 73 mark. You can see that we managed to get a hold up, a nice hold up near the 73 zone. Maybe just we had a few overshoots here, but still neither of the 4-hour candles managed to. Is that correct? Yep, neither of them managed to close below the 73 zone. So in a way, this kind of proved that this little area here for now could play out for the time being as a nice range here. So basically, keep your eyes on these two boundaries of this little range for us to consider the upside, or at least a move within the range towards the upper bound of this, towards the upper bound of it. We would like to see a push at least above the 73.59, 60 zone here, and only then target this the upside. And in terms of the downside, a drop below the 73 mark here could do the trick for more sellers, but we'll keep it short and simple. We will only target the 72.37, 38 zone, which is the lowest point of January. So something to consider, guys, something to keep an eye on. And let's see how this is going to play out. For now, we're going to be very careful and cautious on this one, and we'd rather be safe than sorry. So we'll wait for a clear breakthrough one of the levels that I've just mentioned. EURCHF. Now, I've talked about this one last week, and basically what I was telling you guys that yes, that still we are balancing below this downside line taken from the high of the 12th of December. I spoke about this one last week, and what I was also saying that this level here, the 1.0606, if it gets broken, then yes, we could see further declines, but ideally we would like to see a kind of a nice good close as well below this territory. So we did get a close, but as you can see, we've pushed back above it, and this little kind of drop lower ended up being a nice false breakout on a daily chart if you look at this one. So basically this kind of confirmed that the bulls are not willing to give up here yet near this area, and we can see that now the rate is getting pushed slightly above this downside line. The big question, can this actually continue? For us to consider higher levels, we would like to see a push above the 1.0650 territory. I spoke about this one last week. That's the high of the 17th of February. At the same time, the rate would be placed above its 100 EMA here, shown as the green line, and we could then start targeting this area here, this area of resistance, which is the current highest point of February, around the 1.0728 zone. So again, for now be very careful, although yes, we are kind of flirting heavily here with this downside line, but in order to get a little bit more comfortable, we would like to see a push above the 1.0650, 51 zone, somewhere around here, and only then aim for the upside. In terms of the downside, still the idea remains the same of this level here, the 1.0606, but this time probably ideally we would like to see now a daily close below this, just to be on the safe side. And if we do see a daily close, then there could be more chances for this one to drift further south. And finally, EURUSD. So I talked about this one yesterday. So yesterday, my traders Espresso and tea time, during the tea time, we were balancing again around here somewhere. But what I was saying that in order for us to get comfortable with higher levels, we need to see a nice good push above the 1.0878. For now, it's just kind of playing around here, If we do get a push above this barrier, then yes, we will aim for a larger correction here to the upside, because don't forget that we're still below this downside line taken from the high of the 31st of December. So any move higher up until this line could still be seen as a temporary correction before another leg of selling. So that's why we'll keep it short and simple. But as I said, in terms of the upside, we would like to see a push above this 1.0878 territory before considering slightly higher areas. In terms of the downside, the same idea remains. We need to see a drop below the 1.0777 in order to consider deeper extensions to the downside and basically a resumption of the prevailing trend here. So because this way a drop below the 1.0777 would confirm a forthcoming lower low, and yep, more sellers could join in. But for now, we're keeping a close eye on this little territory, the 1.0878. Let's see if it can push above it. Some of you might probably see as well somewhat of a maybe possible flag pattern here, but to be honest, it's not a very ideal one, so that's why we're gonna stay away from this one. As you can see here, so on the 4-hour chart we have this little pole. Maybe this is like flagging out right now, could be something like that, but again, don't kind of focus on this too much yet. Focus mainly on this barrier here, the 1.0878. Let's keep an eye on that one. Okay guys, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me later on in my trader's tea time, as always, 14:15 GMT, we'll have a look at some of these instruments again and some new ones, and see how everything kind of got along today. But also keep an eye on the economic calendar today. Today we do have some interesting data coming out from Germany, so the GDP figures for Q&Q, the Q&Q Q4. So yep, and a few numbers from the US later on as well. But overall, it's still relatively quiet. But yep, keep your eyes on of course, the developments around surrounding the coronavirus now. Okay, guys, thank you very much, and bye bye.